This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for August 19th, 2015. September corn today up 1 cent, 367 and a quarter on the close. December corn up 1 1/4, 378 and a half on the close. September soybeans down 9 3/4, 903 and a half on the close. November soybeans down 10 3/4, 893 and a half on the close. September meal down 0.60, 324 even on the day. September Chicago wheat up 2 cents, 496 and a quarter. September Minneapolis wheat steady on the day, 508 and a quarter. December Minneapolis wheat down a half a cent on the day, 522 and 3/4 on the close. September Kansas City wheat down 1 3/4, 474 and a quarter on the close. Corn market today trying to get up and going a little bit off some of the pro farmer stats. A little bit of a reiteration that the Eastern Belt may drag this corn yield lower than what USDA has indicated at this point, and we'll see how that pans out. But that was really the core reason behind a little bit of strength coming to the corn market today. Soybeans, on the other hand, good rains across a lot of the nation here. Really only parts of North Dakota and a little bit of Illinois left high and dry out of this system here. Indiana and Ohio are forecast to get the rains tonight. So the extreme western belt into North Dakota, really the only areas that missed rains. Otherwise, very good precipitation and a lot of prospect or forecasting that will really help the soybean crop with talks of million-dollar type rain event occurring. In the wheat market, a little more subdued, kind of on the back of corn, chopping around here a little bit today. Wheat not really needing or wanting to put in a new low. We're sitting around those low area targets here, and we'll see if we can maintain. But upside price counts may be somewhat limited in the near term too. As we see it, more of a range-bound market for the corn and wheat markets in particular. The soybean market may try to get down here, find a low between the 880 and 850 mark, and we believe could bounce off those levels. As we look to the feeder cattle today, down 360, 203.47 and a half. The October live cattle down 232 and a half, 145.07 and a half, and October hogs down 32 and a half at 65.80 on the close there today. Cattle market, we had 232 to 234 dress trade, down $3 to $5 from the prior week, and that just kind of opened a can of worms for lower trade here. A lot of heavyweight cattle around, an indication that packers aren't going to need to pay up here, at least in the near term, to try and get cattle. A good number traded already here at those levels. Looking at the hog market, trying to maintain the range, lost a little strength today as the cattle market broke down, but kind of fended off some of these bearish rhetoric around, so more of a range-bound market for that hog market. And one of the big undertones right now for all these grain markets is the overall certainty or instability we have over in China, with China making some pretty desperate moves here to try and stimulate their economy. That's got the market really kind of in an uproar as to how much demand we'll have, particularly for pork as well as soybeans, and what that might mean for the longer haul due to our exports from the U.S. imported into China. So we'll continue to watch that as one of the big stories here behind the markets. From our vantage point, the market's going to want to try to keep inventory high in China. They're going to want to keep people well fed, so we think that demand will try to tick away here, at least at a reasonable pace. How much we decline is really the question mark a lot of the people are going to try to answer, and we're going to be watching here in the weeks ahead. So watch for further details. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.